All right. Good morning, everybody. The Spot Gamma Founders note is from Friday, so we're kind of on hold for that. When I get the AM one, I'll share it out. It's kind of a mixed bag this morning. Small caps are down more than 0.5%. NASDAQ is down less than a half, but more than a quarter. Same with the Dow and the S&P, all lumped down there in the lower end. Hong Kong is doing the best. It's up 0.25%. Japan right behind it. It's going to be a tricky week. One of the issues that we face is today with Walmart. I know Walmart's not the name that you would think of for risk to the marketplace, but they hold a lot of weight when they talk about their forward guidance. They're going to talk about global economic conditions and how they see things going forward. So if Walmart has earnings and they downgrade forward earnings on the presumption or any kind of language about things slowing down, getting more difficult, any kind of language like that, the market's really going to sit up and pay attention. So Walmart has a lot of impact potential for today. The other one this week, of course, is NVIDIA. Everybody's talking about it. It has the potential to make some really big moves, but the options in that thing are just so big, so volatile that, it's almost impossible to play it with any kind of lotto play. And it has the potential to move massively. Of course, you would instinctively think after the run that it's had, it will have to have an earnings that doesn't just beat. It has to be by an extra wide margin, right? It has to be like the best earnings ever plus. So just getting decent numbers isn't going to do, right? NVIDIA is going to have to kind of set a whole new tier level for how good earnings have to be, or that thing is just going to tank. And that would, as an analyst said the other day, if NVIDIA can't validate this AI kind of extravaganza that we've seen, then that bubble could pop across the board. And that would be one heck of a bubble to pop. Looking at Market Watch, they have the US leading economic indicators as the biggest thing today at 10 o'clock. I'm not saying they're wrong, but that kind of ignores everything else that we have today, including the 52-week auction and a couple of auctions right up front. So the 3-month, the 6-month, you could look at something like the IRX and kind of get an eye on the whole front end of the curve. But it's kind of a big deal. They never get any attention, right? They don't get any love. There's no anticipation that they're going to cause any kind of trouble in the market, but there's a reason that I watch these auctions constantly. And at the very least, even if you don't quite understand what these auctions are about, just look at the clock because you'll know when the data is coming in, and that's all you need to know. Just keep your eye on the clock. When I was setting everything up this morning, the YouTube connection was private, which was odd. And it wasn't connecting to the place where it was normally supposed to connect to. So I don't know. Everything's a little glitchy this morning. I had to log into things that I normally don't have to log into, like maybe an update came through on the browsers over the weekend, and things just feel a little off. but I have the fastest internet in my state, so it's up and running. I monitor that constantly. If it gets worse, let me know. I don't know really too much what I can do except maybe try to restart the whole process. So we are going to get data out of Europe, or at least we're going to get some European Fed speakers. There's this disconnect with the 10-year and the dollar still. So, like a year ago, if the 10-year was up and the dollar was up, we'd be looking at the S&P and the NASDAQ down. That's not necessarily the case anymore. Instead, we got to use like swag levels. If the dollar gets above, say, 106, that'll be issues. If the 10-year gets, above 4.36 or 4.4, that'd be issues. So we can't just look at it as, well, the dollar's up, the 10-year's up, the S&P's going down. It's not going to work that way. So it doesn't mean we don't want to keep our eye on it. Just it would need to be big moves that really kind of cause us issues. So 8:30, 10, 11, 11:30, 1 o'clock, and Australia, I believe. PPI tonight, New Zealand. Yeah, they don't even, close enough. We're going to get some China data tonight, well, Japan data tonight too. But really the biggest things are what's going on with Walmart, what Walmart's going to have to say, and then NVIDIA. NVIDIA earnings. Oh, it's going to be a doozy. So the thing about that NVIDIA earnings, we talked about it before. If everybody says the move can be so big, then you know what's going to happen, right? They'll go in and they'll hedge it to their eyeballs. And no matter which direction NVIDIA goes, they're fine. They're not scrambling to try to cover. That's not the issue. The issue is all of the tangent connections to AI. If NVIDIA is the poster child and the beacon of hope for everything AI, and NVIDIA comes out saying demand is light, there's just no follow through, all this negative talk. If they come out negative on AI, then look at everything that's been running just because they mention AI. We've seen a lot of companies, clothing companies mention they got AI and they pop to the upside. Food store companies mention AI and they pop to the upside. That's those are going to take a direct hit if NVIDIA doesn't come out and sell this AI story to the masses. So it's not just NVIDIA and its earnings. The volume is in normal range. Start the morning always looking at the cumulative overnight volume. I've been asked about this before. I didn't find it in a book anywhere. There was no, like educational series that said set it in here and watch it at these values. When I was putting together my own morning briefing, trying to figure out how to prepare for the day, one of the things that I wanted to try to gauge was the level of participation in the overnight hours. So this is cumulative volume and it starts at midnight. If the volume is light, then we're not going to see this climb very high. And if the volume is heavy, then we will see it climb high. That's it. There's no rhyme or reason to it. And if you watch it every single day, you start to get a feel for what normal volume looks like. And of course, in the last few years, I've been watching it every single day. So I've seen really light days and really heavy days and everything in the middle. It's just a gauge for what's going on in the overnight. So today, for an example, we really don't have a lot of econ in the pre-market. If we came in and we found this sitting in the 40s, we'd have to be really concerned. Why are they sitting out? What's this big thing that has them so scared that they're not trading yet and they're waiting? Now, a lot of times, even though I just made it sound like there's something dire waiting because of the low volume, A lot of times what you'll find is there was just a nation that wasn't open during that trading session that normally is open. Say London's on holiday, or the Asian markets are closed for a holiday, something like that. So usually if we find it light and we can't find the econ, it's because it was just a market that was closed. But if you come in and it's really heavy and there's no econ this morning and can't figure out why it's so heavy, you're going to want to know. You want to go looking around, try to find out why are they in here trading so heavy. So it's just a gauge. It's just a way to, kind of get a feel for the trading that was happening in the overnight hours. And is there anything that really stands out? Are they scared of something and they're hanging back waiting? Are they excited about something and they're piling into it more than they normally would? That's it. Just simple and easy. So my level for normal is between 80 and 180, right around in there. It's a reasonably wide range. If it starts getting below 80, I really want to know what's going on. Definitely below, say, 60, 65. And if it gets above 200, I'm going hunting. I want to know why. Why is it so high? So a lot of times we just glance at it like, yeah, it's normal. Just turn it off. Easy, easy. We're at the weekly pivot point this morning. Crossed through it multiple times. This has no support or resistance to it at all, right? We wouldn't look at this to do any sort of support and resistance. When we're above the weekly pivot point, we're considered to be in a bullish posture. We would want to look for long opportunities, take long trades. And if we did short, we would understand that we're shorting against, the prevailing winds, so to speak. And when we're below it, we want to look for bearish opportunities, want to look for short setups. And if we do try to take any longs, then we just understand that we're going against the grain. But when we're crisscrossing back and forth and we're right at that pivot point, then there's nothing there. When we're well above it, then we can say we're bullish, we're above it, let's look for longs. And when we are well below it, we're bearish, let's look for shorts. But when we're just crisscrossing back and forth, we don't have a dominant thesis yet. To take it back even just a few weeks ago, when we crossed under it just momentarily and we stayed above it for the rest of the week, it wasn't hard to continue to look for long ideas here. We were above the weekly pivot point and price just kept going. So we kept looking for longs. Our bias was bullish easily. But we're not far away from it. We're there, right on it. So we need that bias to kind of show its hand a little bit. Let's get some distance away from there. But we do have distance away from the daily pivot point. In fact, we haven't hit it yet today. So that's an MDP, missed daily pivot. It doesn't even count for today. It counts for tomorrow. If we can go all day today without having hit it. The thing is, our chances of hitting it has kind of gone up a little bit. If we can hit this lower ADR early enough in the day, it opens the possibility that we can hit this upper ADR by the end of the day. Markets are funny like that. So these red lines are the average daily range. It's a 21-day average, so about a market month. And I developed that indicator with the idea of asking a question: what's the market done over the last month? What's the highest to the lowest on average? What's the size of the daily candle? So on any normal given day, the market can go to one of those two red lines. Why? Because that's what it does on average. Day after day, it goes to one of those two lines. The funny thing is, if we get to one early enough, we can go to the other one. Because the entire range from one red line to the other is the ADR range, which right now is 0.92%, or about 46 points. That's 23 to the upside and 23 to the downside. In between those two is 46. If we get really aggressive to the downside, we'll move the entire 46 points down. That would be 49.70, puts us right at the 20-day moving average. And if we turn bullish, we could run all the way to the upper ADR 46 points from where we opened in the Globex at 50.62. So simple enough. It is what the market has done day after day over the last 20 days. We went into the close Friday on the S&P with a hangman. If you're not familiar with candle patterns, think of the hammer candle, right? But you don't want a hammer at the highs. Hammers are at the lows. If they're at the highs, they're a hangman. Now, there's a little bit of more to it than that. It's just not as simple as that, but close enough. And, you know, an analyst could argue that the wick across the top last week is a little too big and that it invalidates the hangman. Try not to get too hung up on these sort of things. Perfect is the enemy, right? So is that wick too big? I mean, not for me. I'm good. That's a hangman. Otherwise, you could look at that and say it invalidates the pattern. Just be consistent with your analysis, whichever way you decide to go. We're still looking at all these moving averages that are fanned out nicely or not too far away from the 10-week. So, you know, we're not too overextended. We are inside week now. This is the second week after setting this high back on the first week of February. We've just been inside of it all last week. Now this week, we're forming an IX10 on the weekly. So an inside week would be just 1 week. And we call it an inside week, and that is exactly what it sounds like. We're inside. But inside week for multiple weeks or multiple days, multiple hours, whatever your time frame. There's trade strategy, trade setup, whatever you want to call it, called IX10. I believe Market Gauge is the one that came up with that moniker. Either way, I always found it an easy thing to remember, so it stuck with me, and it's what I call them. So this week that we're in currently needs to close before this is an official IX10. Right now, we're just inside week. And the longer we stay inside this boundary, the more energy we're going to build up. I know it's an interesting word to use, energy. But when a market is paused like this, that's what it's doing, is building up energy. And we know that from using the RSI Laguerre. So, you know, you can search in the Thinkorswim workbook, just type in RSI Laguerre. You'll find I've got a ton of them, different ones, different examples, different extra pieces built into it. But you'll see that energy is being built up. Right now, we don't quite have a topping pattern on this time frame, not yet. On the daily, that's a topping pattern. Now, that doesn't mean we're going to roll over. Okay, we can come out of a topping pattern to the upside and we can continue to go up, but it is a topping pattern. Ten-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. And when we're at the lows, we expect to go to the highs. We're going to lose this low throughout the day today, but we remade that low or retested that low. And so it's not going to fall off of the volume profile now. It's going to stick. But don't see any way or any reason for the point of control to move at this point. So we're not really looking for a significant change to this profile anytime soon. For a move to the upside, we got the point of control against us, 50.43. And for a move to the downside, there is a pretty solid shelf down here at around 49.75. It's shallow into that zone. In fact, even just turning around down here is a little odd because you have to ask, what did we hit? What turned us around down here? This is a shallow zone. We should have fallen through it easily like we did back here, or how we ran back through it here. Now, like I've mentioned before, sometimes the S&P turns not because it hit something, but because a correlated market or an inversely correlated market that hit something. So if we go back to last year when the dollar and the 10-year really influenced the S&P, during that time frame, if the dollar had ran up and hit resistance or the dollar index and started to fall, we would see, like the S&P hit support and start to rise, that kind of thing. So that's kind of the argument for this low this morning. What did we hit? I can argue that maybe we didn't hit anything. One of our inverse markets did, or one of our correlated markets did. Either way, that 49.96 VPOC has been hit today. Now, there's two ways to do this. You can leave it on for the rest of the day because the day's not done yet. We may interact with that level again, or you could just call it quits and take it off. I'm going to leave it on there until the end of the day, so it'll be there tomorrow when we do the morning briefing. Friday did earn a VPOC as well, so we got one overhead, 50.24. Just keep in mind that this lower one, it already has been hit, right? So that first touch play is gone. There is no first touch play at this point, but it still may be a level of interest. So something, let's move this. Something brokers have a hard time with is this situation here. After a holiday or a short trading week, you get this little bit of Sunday night and Monday kind of trading activity where it closed at 1 o'clock. There's no good way for brokers to handle this. If your charting software is something like Jigsaw, maybe Bookmap, you can put all those candles into Friday, or you can put all those candles into today and just get rid of it. So this VPOC that I marked out for Monday, we don't want to do that. We want to move it to Friday's area because there's one up there. And if you're marking out Globex highs and Globex lows, that sort of thing, you would be better off absorbing Monday in with today's price action. So instead of our Globex high for today being where we opened last night at 6 o'clock, you would want to just take all of, say, Sunday night to this morning, and that would be your Globex high and your Globex low. You can still break it down into zones and ranges, right? If that's your low and that's your high, there'd be a half back somewhere between those two. And then for your breakouts on each side, your 1, 2, 3, 6, 111 warning centers, on and on from there. If we mark it that way, you'll see how it kind of helps us understand what price is doing a little bit better. Hey, look, it's the half back. Imagine that. So we are at the 10-day moving average. We can consider that a reset. We're definitely not overbought. We're not oversold. We're not extended. It doesn't owe us a pullback. It doesn't owe us anything. And we're less than 2.5%, more than 2.25% from the 10 week moving average. And again, that's not overbought. It's not overextended. It doesn't owe us too much. It doesn't owe us a pullback. Last week, we measured this range and it showed that the current week we're in now had more volatility than the previous week. But until Friday's close, it's not valid. So when we looked at it Friday morning, that was just a kind of a feel for where we were at. Now it's valid. This is a lot of volatility. I know it doesn't look like much, but you got to remember this is a short week. So we just measured a 5-day week and we took that box and set it on a 4-day week. From the very fact that there's only 4 days, there's less volatility. So the range should be smaller, right? It's like miles per hour in your car. If you're driving 50 miles an hour and you drive for 5 hours, you can get a lot farther than if you're driving 50 miles an hour and you drive for 4 hours. Makes sense. So the volatility should be smaller. The range, the distance here should be smaller because there's 4 days instead of 5. So when we look at this and we see that the range is bigger, even though that distance doesn't look like much, it's significant. Because we're missing a day in there too. So they got a lot of volatility packed into this week. Why? It's not FOMC, right? We're going to get FOMC minutes, but that's not extreme. It's no QRA or anything like that. It's NVIDIA. Nah, FOMC minutes this week. That's not the same thing, right? We had FOMC. They're going to do the minutes from that. They, their publication, their release, and they'll put it out this week. That's where we'll get the dot plots and we'll see who voted for what and what the discussions were, right? All that extra stuff. It's because of NVIDIA. NVIDIA has the market worried enough that it affected the entire broader market, like I was talking about earlier. So we saw a little bit of weakness last week in the FANGs. This is not necessarily a bad thing. We need this rally to broaden out, right? We can't continue to lean on the Magnificent 5 or 7 or whatever the name is now. We can't continue to expect just those 5 to 7 names to continue to carry the entire market. And we've seen it. I mean, it's really starting to broaden out into a lot of different areas. But on the other side of that, we can't have those names just dropping into the trash can either. So they got to kind of hold their range. If they hold their range and rise up with us, all is good. But even if 95 out of 100 names in the S&P 100 are all going up, if those 5 start to go down, the other 95 can't hold us up. So keep your eye on technology and consumer discretionary, because the Mag 5 or the Mag 7, the FANG names, they're going to come mostly from these 2 categories. From a risk on standpoint, the 3 across the top are good, right? Finance, technology, consumer discretionary. But over the years, finance just, it lost a lot of its power. I'm not going to say it's not needed anymore, but we can do without it if we need to. So keep your eye on tech and consumer discretionary. If it starts to turn around and, begin to run back up, I don't necessarily think we're going to see a rotation to where those other sectors and other names quit going up. I think they're just going to add to this, right? When we look at growth versus value, for an example, it's not either or. I know we say it that way because that's what a ratio chart is, one versus the other, growth versus value, IWF versus IWD. But they can both go up. Growth and value can both go up. Both can go down. This is just asking which one is going up more, which one is stronger. But that doesn't mean the other one is, quote, weak. It's just not as strong. So you see this big run from January 2024, basically the start of this turning point down here, swing low. And it's been a magnificent run into unseen levels, levels we've never seen before. We're getting a little bit of a pullback here. So, growth versus value. Just, the argument there is that by itself, that's not bearish. Another update on TrendSpider. I love these guys. They're always coming up with something new. I'll dig into them later. So what do we got this morning? Gold, metal, some China ADRs, but not even enough for that. Just gold, really. Precious metals are up. That's it. On the downside, silver. So really, it was just gold that was up, not even precious metals. Silver's down. China ADRs are down. Solar, jets, airliners, crude. It's a mixed bag. Typical Monday where we come in, and I know it's Tuesday, but typical Monday, typical start of the week where we come in and everything's just kind of chopping about, looking for some good, solid information to stand on. We don't have a dominant thesis this morning for what's for equities to look at or sectors to look at unless you want to go short. Jets are down at 1% this morning. But I think we're better off letting this morning kind of come in a little bit, get some more data, see how the market takes Walmart. And really, we're just going to be on hurry up and wait for NVIDIA this week. Wouldn't be surprised if we start to see the market just chop sideways. The thing about being in a hurry up and wait situation with the market is we would want to buy the lows and sell the highs, right? Buy into weakness, sell into strength if we're going to chop sideways. Because what we would be expecting is to kind of be in a range bound market where we build out a megaphone pattern. And remember what our range is. We'll just consider all of this our range, right? Seeing semiconductors down a little bit too. Of course, that makes sense. If we lose flows through NVIDIA and, kind of get that proxy fear into the other semis, they're all just going to kind of hang out and go sideways. A lot of people don't want to assume the risk and they're just getting out. It's hard to hedge something like NVIDIA, right? Those costs are just crazy. I've got a call spread on NVIDIA that I've been in for a while. It's 50 points wide. And I didn't close it, but my break even is like 530. As long as it stays above 530, then I'm going to hit max profit in this thing, or pretty close to max profit. So, it would have to fall all the way back down here for me to lose. And sure, I mean, it can do that. But yeah, I was wrong. It's not even 530, it's 520. As long as it holds above that level, I'm going to get, pretty close to max profit. But you can't hedge this thing. I mean, it's just so crazy expensive. You would have to use something else to be able to hedge this, if you're in it. Look how expensive these options are. It's crazy. It's got a market maker move of $75. And it has an expected move of $80. Put those two together, you're looking at a 150 point move to the upside and a 150 point move to the downside. That's a 300 point range for NVIDIA's earnings from high to low. That's crazy. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.